seeing some tapering, seeing some of those rate hikes, doing away with the stimulus that we've seen, would that solve the problem that you're citing here?
Yes, it would. I think we've already seen a little bit of that with stocks at 22 times earnings. I don't think you're going to see more multiple expansion. And that's really been the impact of Fed policy, is that broad-based multiple expansion. But yes, if we saw the Fed signal definitively that tightening was coming, that tapering was coming, I think markets and investors would be forced to start paying attention to fundamentals. They've got to look at companies that can weather through a higher rate environment, weather through a higher inflationary environment, have the ability to pass on higher input costs and prices to their consumers. Those are things that investors are going to have to start paying more attention to. And yes, I think a change in the tone at the Fed would be a significant catalyst for that.
Well, speaking of fundamentals, Ernesto, you say that there are signs of bubbles everywhere. You cite in the producer's notes there are commodities, you've got crypto, real estate, NFTs, SPACs. Are these pockets a systemic issue for the markets? And what do you think corrects the price levels that you believe to be too hot right now?
Yeah, well, some of them have already corrected a little bit. I mean, you see Bitcoin now trading under 30,000. You saw commodity prices, lumber prices come down, 40, 50% now. So some of those are correcting because the Fed came out a little bit, or the market perceived it to be a little bit more hawkish in their last meeting. Although I think that there will be a reassuring message from Chairman Powell today. But I think going back to the fundamentals, I think that will be the key. And I think the reporting of the second quarter and the guidance that companies give us will establish the tone for the markets and for the months to come. Because as my counterpart is suggesting, the market is very richly priced, and we need to see some positive news, some positive guidance coming out from different sectors of the market to establish what the new direction will be in terms of value versus growth, inflation versus reflation versus secular growth. So we need to hear that commentary, and that will probably set the tone. Although we're on the side of reflation could persist. You want to be tilted towards value and cyclicals and away from growth, because despite the fact that the yields have gone lower in the 10-year, we still think that they're going to go back up as the economy continues to strengthen, and we see the Fed supportive of that to continue.
Shepard Smith here. Thanks for watching CNBC on YouTube.